Characteristics of Hong Kong's financial market. Let's begin with the key features of Hong Kong's financial market. It's known as the one of the freest and most open economy in the world, with no exchange contracts and a fully open capital account, which attract global investors and make it a hub for asset management and cross-border finance. Hong Kong also serves as a bridge between mainland China to the world, helping foreign investors into China and supporting Chinese firms in raising capital overseas. Lastly, it ranks third globally and first in Asia among international financial centers. Hong Kong economy indicators. Now let's recover Hong Kong's market strength. Let's look at its recent economy performance. In 2023, GDP grew by 3.2%, but in 2024, it's expected to slow to 2.5%, showing moderate but continued growth. Inflation remains steady at 1.7%, while unemployment rose slightly from 2.9% to 3.1%, and labor participation stayed at 57%. Overall, the economy shows stable but slower recovery momentum. Next, let's take a look at the performance of financial market, especially the Hang Seng Index. It reflects the overall trend of Hong Kong stock markets, covering major listed companies. After a decline in 2023, the index saw a strong rebound in 2024, showing that investor confidence has returned, and the market's outlook has become more positive. Let's now turn our attention to the institution responsible for managing Hong Kong's monetary and banking system. The Hong Kong Monetary Authority, or HKMA, was established in 1993 through the mergers of the Office of the Exchanging Fund and the Office of the Commissioners of Banking. Its role is similar to a central bank. It oversees monetary policy, maintains currency stability, and regulates banking institutions. Characteristic of monetary system. Hong Kong follows a currency-based system, also called a linked exchange rate system. Under this system, the Hong Kong dollar is pegged to the US dollar, within a fixed range of 7.75 to 7.85 per USD. Every HKD in circulation must be fully backed by foreign exchange reserves, mainly in USD. As a result, Hong Kong has a passive monetary policy. It can set interest rate independently and must follow US decision. Another unique feature is the multiple insurance systems, where commercial banks such as HSBC issue Hong Kong's banknotes. However, this must all be backed by US dollar held in the exchange fund. Introduction to monetary policy. The main goal of Hong Kong's monetary policy is to maintain exchange rate stability. To do this, the HKMA relies on two main tools. First is the exchange fund operations. When the Hong Kong's dollar is too strong, the HKMA sells HKD and buys USD to prevent appreciation. When the HKD is too weak, it buys HKD and sells USD to avoid depreciation. The second tool is interest rate corridor system, which includes an upper limit, the discount window rate, to prevent capital shortage, a lower limit, the deposit facility rate, to attract bank deposits, and a base rate, which reflects market expectation and aligns with US interest rate. This system brings both advantages and limitations. On the plus side, it helps maintain stable exchange rate, which boosts investor confidence and attract international capital. The policy is also transparent and rule-based, making it easy for global markets to understand and follow. However, the downside is that Hong Kong cannot set interest rate independently, which reduces flexibility in responding to local economy needs. We must closely follow US monetary policy, even when it doesn't fully fit local conditions.
I am going to introduce the financial environment of Hong Kong. I will talk about the three main parts. Part 1. Hong Kong monetary authorities and monetary policies. Let us start with the base rate. In Hong Kong, the base interest rate is based on the US interest rate, so Hong Kong cannot exceed its own rate. This is because the Hong Kong dollar is linked to the US dollars and this affects the local interest rate. Hong Kong also uses something called the interest rate corridor system. This system helps keep the short-term interbank interest rates stable, so they don't go up and down too much. Now, let us look at the money supply, especially M2. M2 includes M1 plus time deposits. It represents the total brought money in the market. According to Macro as of March 2025, the M2 years growth rate in Hong Kong reached 10.84%, the highest in the past 2 years. This means that the money supply is growing and the market has more liquidity, and equals the following impact. Credit and money flows in the market are more active. Banks have more ability to lend. It helps keep the financial market stable and increase investment confidence. The Hong Kong Stock Exchange and Clearing, the HKEX, was established on March 6, 2000. It is one of the largest exchanges in Asia and in broad bridge between Chinese and the international capital. Its subsidiaries include the London Metal Exchange and the Hong Kong Futures Exchange. There are two special systems at HKES. The first is weighted voting rate. This means some shares have more voting power even those that get the same amount of dividends. Some shareholders can influence company decisions more with less special shares. Second is dual primary listing. This allows a company to list on two exchanges at the same time and following both sets of rules and regulations. Let us look at some market data from 2023 and 2024. The following are the official statistics for the Hong Kong security market in 2023 and 2024, covering its indicators such as the number of listed companies, total market capitalization, average daily trading volume, number of news listens, and total fundraisers. Besides on this data, we can see there are three situations. More active trading, the average daily trading increased by 25.5%, showing a more active market value increased. The total market capitalization went up by 13.8%. IPO market recovery. The number of new listings was slightly lower, but IPO fundraising grew by 88.9%, showing strong demand. Better fundraising ability. The total fund raised grew by 26.1%, meaning companies can raise money more easily through the Hong Kong market. Overall, the Hong Kong market had strong performance in 2024 and showed good development momentum. The Xinhongji Property. Lastly, let us look at the representative Hong Kong company, Xinhongji Property. It was founded in 1963 and listed on the HKES in 1972. Its main business including property development, property management, and leasing. It also runs other businesses like construction, logistics, and travel and tourism. This company has two special. It has stable long-term cash flows. Its diverse property portfolios help it deal with different economic cycles. As of May 14, its stock price was 10 Hong Kong dollars and 55%.
Impact of Hong Kong monetary policy on Xinhongji. First, take a look at the overall interest rate trends in Hong Kong. Because Hong Kong implements the linked exchange rate systems, its interest rates are closely tied to the policy of the U.S. Fed. This has a direct impact on Xinhongji. When U.S. interest rates increase, Hong Kong interest rates will go up, and Xinhongji faces higher bank loan costs and increased interest expenses, leading to greater financing pressure and reduced profitability. On the other hand, when U.S. rates decrease, Hong Kong interest rates drop, Xinhongji facing cost falls, helping the company expand projects and improve profit margins. To put it simply, Hong Kong's interest rates level directly affect Xinhongji capital costs and business strategy. Impact of bank interest rates on housing demand. Bank interest rates influence the public willingness to purchase property, and therefore indirectly affect Xinhongji property sales revenue. When interest rates go down, people face pressure from mortgage payments, willingness to buy property increase, and Xinhongji residential sales performance may improve, generating more revenue. Conversely, when the interest rates rise, mortgage burden grow heavier. This suppresses housing demand. Xinhongji sales may face challenges and revenue could decline. For we can see the interest rates not only affect a company financing costs, but also have a direct impact on market demand and overall income performance. Bank introductions. Established in 1933, subsidiary of the HSBC Group, one of the four major banks in Hong Kong, one of the note issuing banks in Hong Kong. Business scope, mainly in China business. Financial performance overview. Overall, Hang Seng Bank maintains steadily growth in 2024, with healthy profitability, solid capital levels, and strong operational performance. This is the loan relationship with Xinhongji. In May 2024, Xinhongji secured 23 billion Hong Kong dollar through a syndicated loan involving a total of 23 banks, with an interest rate set at HIBOR plus 0.85 percentage points. The funds were primarily used to refinance existing debt and supplement working capitals. Among the participating banks, Hang Seng not only provided funding but also served as one of the co-rating arrangers. The loan was significantly oversubscribed, with demand from banks far exceeding the original target amounts, demonstrating the strong confidence finance institutions have in Xinhongji financial strength. At the same time, Hang Seng roles as a lead coordinator highlighted its professional standing and influence in Hong Kong corporate finance market.
Overall, this transaction helps strengthen Xinhongji liquidity position while further solidifying Heng Seng Bank reputation as an indispensable player in large-scale cooperating finance. Price forecasting model and evaluations. The PE method to estimate Xinhongji share price for 2025. First step is to project the 2025 EPS. Regarding EPS, it has declined over the past 5 years, from 10.13 to 7.5 Hong Kong dollar in 2024. We expect a slight rebound in 2025 for 3 reasons. Hong Kong's latest housing policy have been relaxed. Interest rates are likely to fall in the second half of the year, and the company has several large residential projects set to launch. Considering these 3 factors, we assume EPS will increase by 3%, multiplying 7.5 Hong Kong dollar by 1.03 yields approximately 7.725 Hong Kong dollars, which is our projected EPS for 2025. And we selected a reasonable PE ratio and dividend into 3 scenarios: optimistic, neutral, and conservative, to make the stock price forecast more complete and flexible. In the optimistic scenario, if expectations for interest rates cuts come true and housing demand continues to recover, driving up sales momentum, then the market may return to the highest multiple since in the past 5 years, 12.56 times. Next, in the neutral scenario, if the housing market improves but interest rates persist, we adopt that the 5-year average PE ratios of approximately 11.9 times. Conservative scenario, if interest rates fail to decline or market confidence in property stocks remain weak, the multiple may fall into the lower end of historical range, 10.28 times. By applying these 3 multiples to the projected 2025 EPS of approximately 7.725 Hong Kong dollar, we can derive a range of estimated share price that reflects optimistic, neutrals, and conservative market scenarios.